Well, good morning. Thanks for joining us here on a Friday morning. Hope you're doing well. I'm Marlon Bowling, your tour guide to the ag commodities. We're going to take you on an excursion as to what will be driving the markets as we wrap up the week. What an adventurous week we have had already. Of course, just the other day, we had the quarterly stocks report and the planted acreage report. That threw the markets into a tailspin in some degree or another. Then we had the WASDE report that came out here earlier this week. That definitely threw the grain markets right off of the cliff. And after that happened, then we had a rebound the night before last. Then we had follow-through buying yesterday. And lo and behold, we were higher again overnight. Here to talk about it, I want to welcome aboard Brian Hoops, the president of Midwest Market Solutions. He joins us from Springfield, Missouri this morning. All right, Brian, we had a lot of action overnight, gains in the grains, I guess you could say, and it looks like it was led by the wheat. So from what I can gather, it sounds like there's a little concern over this Black Sea shipping agreement, and there may not be an extension after all. What do you think?
Well, yeah, I think that's a big part of what's happening with the wheat is that agreement expires on the 17th, and there's really been very little rumblings about extending that agreement any further. So there looks like it could be coming to an end. Of course, there's always that last minute Hail Mary where they do reach an agreement. But wheat's, I think ahead of the weekend, wants to put in some premium because of that. You also have dryness really starting to develop in parts of the spring wheat belt, including Canada, Montana, parts of North Dakota. Those crops, that crop, spring wheat, other small grains in retreat, and harvest is going to come probably sooner rather than later. It was planted a little bit late, and now it's going to hit maturity even quicker, which means less yield. So that's a concern for the spring Minneapolis wheat. That should be the upside leader here for the wheat complex. We also saw good gains overnight in corn and beans, and I know you like to talk about technicals. So from a technical perspective, corn took out last week's highs. December corn did. And a close above that, 509.5 area, should be bullish for the futures, and it should give us additional gains going into the weekend and into next week. So November soybeans, 1378 is a key point on the charts to watch. That was the high from the crop report day that you mentioned. We exceeded that overnight. If we could close above it, we haven't closed above that area since late February. So close above that area, I think, would be very technically friendly on the chart. So there's some points we're watching going into the weekend. If we can maintain some strength and get above those areas, I think we're in decent shape, at least technically, especially after overcoming some bearish supply and demand news earlier this week.
Yeah, you can see December corn was up 8.5 cents in the overnight trade. Let's walk through these here, and I'll get everybody updated on what happened overnight in the Globex trade. We'll start with the corn. These are quotes provided by Bar Chart. September corn was up 8 3/4 this morning at 502 1/4. In December, 8.5 higher at 509. Well, that was about a nickel off of our overnight high. Soybean trade, well, we had the August contract up 4 3/4 at 1489.5, but it was well off of its overnight high by about 9 cents. November up 6 3/4 at 1376.5. That was off of its overnight high by roughly about 8 cents or so. Now, if you look at the wheat market in Chicago, we had September 14 higher at 653 3/4. That was a nickel off of its high, but it was 16 cents off of its overnight low. Keep that in mind. If you look at Kansas City wheat, you had the September contract 14 1/4 higher at 820 1/4. That was a good 19 cents off of its overnight low, within about 4.5 cents of its high. In Minneapolis, spring wheat, you had September 17 1/4 higher at 879. And on the cotton market, what did we do in December, the new crop month? Well, we were 37 points higher at 82.05 cents per pound. Now, I have seen quite a battle royale, Brian, among weather forecasters as to what the future holds. And some are saying it's going to be hot and dry in the Midwest. Some are saying no way. They say it'll be cool in the 3 I-states north of, let's say, I-70, but there will be occasional rain moving through. So that seems to be leading to confusion among traders what the weather will do, and we're right in that critical time of year.
Yeah, and that's what makes a market, is that uncertainty or that confusion about if we should be buying, should you be selling based off the weather forecast. At least in the near term, it does look like there's going to be decent rain chances. Probably a good 80 to 85% of the Corn Belt is going to receive some moisture, and along with cold temperatures, that confusion outlies in the month of August, where some of the models are talking about a return to hotter and drier conditions, which would be detrimental to soybeans especially, but also hurt the corn fill, as a lot of this crop is going through pollination. We'll be filling out ears here before too long. So it'll definitely affect both corn and beans if, in fact, it does turn hot and dry in August.
That is very true. Hard to believe we're that far along in the growing season already. Brian, thanks for the comments. Sit tight. We'll take a look at livestock after a word from our sponsors. Come on back. All right, we're back talking with Brian Hoops of Midwest Market Solutions. Let's focus now on our livestock trade. And Brian, I wanted to ask you about the cash cattle movement out in the plains. From what I understand, there may have been a little bit of cash market activity, but it seems like it was pretty light. I haven't seen much of anything so far this week. Have you? We may have lost Brian's connection. We're going to work on reestablishing that. I tell you what, let's take a look then at how we finished yesterday, just for a point of reference on the livestock trade. We'll go to our quotes provided by bar chart here. And on the live cattle board, we had the August contract one tick higher, just one tick, 2 cents higher at 176.90 yesterday. However, you had all the other months beyond that trading about steady to about 25 cents lower. So a little bit of a weaker trend here on the live cattle. Let's check out how we ended up in the feeder cattle market yesterday. We had the August contract, down $1.57 at 245. So another day of hard down trade in feeders. You had September $1.95 lower, and then beyond that, everything was over $2 lower from October on out. So not a great week for the feeders here so far. Lean hogs, though, went the other way. Triple-digit gains through October. August was up $1.15 at 96.50. I think we have Brian Hoops back with us on the line. I was going to ask you, Brian, have you heard of any cash cattle market activity in the plains? I heard it might have been kind of light.
Yeah, so what we've heard so far has been about 1,000 head in a range of maybe 175 to 178. Of course, 178 would be steady with last week, so you really don't want to see a lot weaker than that, but there was some trade at some lower money. The futures did sell off, but then did have a recovery by end of the day on some hedge lifting, and it kind of recreated a hook reversal. If you can build on that, taking out yesterday's highs, you should find at least some follow-through buying near the opening bell. But otherwise, the cash, I think, is going to be coming in probably no better than steady this week. It looks like a steady to lower market in the southern plains, but some dress trade is coming in at $1 to $2 higher in Nebraska this week.
All righty. Well, I appreciate that. And I did want to show the beef cutout values from yesterday afternoon, according to USDA. Just to point out, they were sliding again. They had seemed to level off for a little bit. But boy, we had choice cuts down $4.07 yesterday at 306.91 per hundredweight. Well, if you compare it to a week ago, you know what we were back then? 319.87. So we're still running about $13 behind week ago levels on the choice cuts. And it makes it hard to rally the futures trade when you have the wholesale trade sagging like that. All right, Brian, thank you so much for talking with us. I appreciate it. Have a great weekend. We'll check in with you next week. Brian Hoops of Midwest Market Solutions with us from Springfield, Missouri.